Hello and welcome back to Market Brief After Hours. It is the first full trading week of 2026, and if you thought the new year would start with a quiet whimper, the markets had other plans. We are looking at a fascinating session where geopolitical shockwaves met an immovable wall of investor optimism.
It really was a textbook case of climbing the wall of worry. The U.S. said it carried out an operation in Venezuela over the weekend, capturing President Nicolas Maduro and transferring him to New York to face criminal charges. Normally, that kind of geopolitical shock would send markets running for cover. Instead, equities pushed higher, and oil prices actually edged lower as investors assessed the broader impact.
Let's get right into those numbers, because record highs is not an exaggeration. The U.S. indices completely brushed off the tension.
They certainly did. The Dow Jones Industrial Average was the star of the show, surging nearly 600 points. To be precise, it jumped 1.23% to close at a fresh all-time high of 48,977. That is a massive psychological win for the bulls right out of the gate.
And it wasn't just the blue chips. The broader market participated too.
Right. The S&P 500 extended its gains, adding 0.64% to finish at 6,902. We are knocking on the door of 7,000 there. And the tech-heavy Nasdaq composite didn't want to be left out either. It climbed 0.69% to settle at 23,396. What stood out to me was the sector rotation. Energy, financials, and defense stocks were doing the heavy lifting, which makes sense given the geopolitical backdrop.
It's interesting you mentioned defense because that seemed to be a global theme, not just a Wall Street story. We saw significant movement across the Atlantic as well.
Absolutely. Europe had a very strong session. The Stoxx 600 rose 0.9%, but if you look at the country-specific indices, the bullishness was everywhere. Germany's DAX jumped 1.25% to 24,847. In the UK, the FTSE 100 hit a record close, gaining 0.54% to finish at 10,005.
Breaking that 10,000 barrier for the FTSE is significant.
It is. And Italy's FTSE MIB was up nearly 1%, closing at 45,819. The only outlier was the Swiss market, which slipped slightly. But the real story in Europe was the defense sector. The Stoxx Europe Aerospace and Defense Index hit its highest level since October. We saw Rheinmetall surge 9.3% and Hensoldt up 8.2%. Investors are clearly betting that geopolitical instability translates to higher defense spending.
Before we move on to Asia, I want to touch on the economic data coming out of Europe. It seemed a bit mixed compared to the stock performance.
Mixed is putting it politely. It was a tale of divergence. The UK manufacturing PMI is actually holding up in expansion territory at 50.6. France also returned to growth, but the broader Eurozone PMI fell to 48.8 in December, which is the weakest reading since March. Germany and Italy are still contracting. So the equity rally in Europe is really looking past the current economic softness and focusing on future earnings and defense spending.
Let's swing over to Asia. It seems like the record high contagion spread there as well.
It was a sea of green. Japan's Nikkei 225 jumped almost 3%, 2.97% to be exact, closing at 51833. South Korea's Kospi was even hotter, surging 3.43% to a record close of 4457.
And was that driven by defense stocks too?
Partially, yes. Japanese defense names like Mitsubishi Heavy Industries were up over 8%. But in Korea, you also had a massive tech catalyst. Samsung Electronics jumped more than 7%. They outlined plans to double their AI-enabled devices this year, and the market absolutely loved it.
So we have stocks rallying on war news and AI hype. But usually when geopolitical tension rises, we see moves in commodities. What happened with oil?
Oil is back in focus. With the regime change in Venezuela, the market is trying to figure out if this means more supply eventually or short-term disruption. For now, prices climbed. U.S. crude rose 1.83% to $58.37 a barrel, and Brent was up similarly to $61.84.
And naturally, that lifted the energy sector.
Big time. Chevron jumped 5.1%. Investors see them as a key beneficiary of reopening Venezuela's energy sector. And the oil field services companies, the ones that would rebuild the infrastructure, they flew. Halliburton was up nearly 8%, and SLB rose almost 9%.
Now, usually when risk appetite is this high, when stocks are ripping higher, you'd expect safe havens like gold to sell off. But that didn't happen, did it?
No, and that is the most fascinating dynamic of this market right now. It's what we call a barbell approach. Investors are buying high-risk growth stocks, but they are also terrifyingly hedging with safe havens. Gold had a monster session, rebounding 2.62% to close at $4,445.
That is a huge move for a single day in the metals market.
It is, and technically, gold is looking incredibly strong. It's trading well above its 50-day, 100-day, and 200-day moving averages. But if you think gold was impressive, look at silver. It surged 4.59% to close at $76.16. The momentum there is exceptionally strong.
So stocks up, oil up, gold up. Let's look at the currencies. I know a lot of our listeners track the technicals closely. What is the chart telling us about the euro?
The USD pair is showing resilience. It closed at 1.1725. The key here is the moving averages. The pair is comfortably above the 50-day SMA at 1.1640, the 100-day at 1.1664, and the 200-day at 1.1550. As long as it holds above that 1.1660 support zone, the medium-term tone remains bullish.
And the British pound? It seemed to have a breakout moment.
A very decisive breakout. GBP USD rallied 0.61% to close at 1.3543. It cleared all major moving averages. The 50-day is down at 1.3277. Breaking above 1.35 is significant. The next major upside target is around 1.3700. The bulls are definitely in control there.
On the flip side, the yen seemed to struggle to hold its ground.
USD JPY is in a consolidation phase. It closed down slightly at 156.33, but we saw a rejection wick near the highs of 157.30. It's still in a broader bullish trend, trading above the 50-day SMA at 155.33, but it feels like it's waiting for a catalyst to pick a direction.
Let's talk about the crypto markets. We saw gold rallying as a hedge. Was Bitcoin doing the same?
Exactly the same. Bitcoin traded above $94,000, up over 3%. It's the highest level since mid-November. And that action spilled over into the equity market. Coinbase jumped nearly 8%.
That wasn't just on Bitcoin price action, though, right? There was an analyst upgrade?
Correct. Goldman Sachs upgraded Coinbase from neutral to buy. They cited revenue growth and market share gains. When you combine an upgrade from a major bank with Bitcoin surging, you get a very powerful rally.
Let's run through some other market movers. We had some corporate news driving big swings. Okta announced a buyback.
Yes, a $1 billion share repurchase program. The stock popped about 5%. It signals management is confident in their long-term growth, and investors always like seeing cash return to shareholders.
But it wasn't good news for everyone. Versant Media took a hit.
A big hit, down more than 13%. This was related to the news about their separation from Comcast. The market clearly didn't like the details or the implications of that split. They were the biggest loser in the S&P 500 for the day.
And we saw some massive volatility in the biotech space. We had one stock crash 50% and another surge almost 20%.
That is the nature of the biotech beast. Zenus Biopharma plunged 51% because they aren't eligible for milestone payments on a key drug trial. Just devastating for shareholders. On the other hand, GH Research jumped over 17% because the FDA lifted a clinical hold on their drug application. It's a reminder of how binary the risks are in that sector.
One company we haven't mentioned yet is QXO. They secured some major funding.
They did. They climbed 18% after getting a $1.2 billion investment led by Apollo. In this environment, securing that kind of capital is a massive vote of confidence for their growth plans.
I want to circle back to the macro picture before we wrap up. We have stocks at highs, but what is the bond market telling us? Usually, if growth is exploding, yields go up, but they eased back?
That's the nuance. The U.S. 10-year Treasury yield actually fell more than 3 basis points to 4.155%. The 2-year yield also dropped to 3.453%.
Why the disconnect?
It goes back to that manufacturing data we touched on earlier. The U.S. ISM Manufacturing Index slipped to 47.9 in December. That's contraction. New orders are down, so the bond market is looking at the economy and saying, hey, things are still a bit soft. The Fed might need to be supportive. Meanwhile, the stock market is looking at Venezuela and AI and saying, we are going to the moon.
It's a delicate balance. We have a market that is pricing in perfection on the earnings side, while hedging for disaster with gold and crypto, all while the manufacturing sector is still shrinking.
It is a fascinating setup. We are seeing risk-on behavior, but with a very cautious undercurrent in fixed income.
The fact that the Dow is near 49,000 while manufacturing is contracting suggests investors are betting heavily on a soft landing and a rebound in growth later this year.
And with oil prices rising, that adds another layer of complexity regarding inflation.
Exactly. If energy costs spike because of the Venezuela situation, that complicates the picture for central banks. But for today, the market decided to focus on the positives: decisive action in Washington, strong technicals in Forex, and corporate buybacks.
A strong start to 2026, indeed. We will have to see if this momentum can hold as we get more labor market data later in the week.
That will be the next big test. But for now, the bulls are definitely in charge.
We will leave it there for today. A record-setting start to the year. If you find this useful, please follow Market Brief After Hours. We'll catch you next time.